Good morning, everybody. Welcome. Hope everybody's doing well. Good morning. Looks like good jobs report this morning. Trying to mount that 7,000 level again, so we'll discuss that. Good morning. Good morning. It's just Jim. Good morning, Butch Voltarian. We'll get everybody another minute to file in here. Good morning. All right. Good morning, everybody. We'll go ahead and get started this morning. I'm sure some other people will be filing in. So this is Michael coming to you from Gamma Edge on Wednesday, February 11th with our pre-market prep session. As always, we'll cover sentiment, structure, and trend, those three pillars of our morning SPX game plan. And then we'll go over some individual equities at the end if anybody wants to review those, and I'll hang out for a few minutes. So let's go ahead and jump right into it. Market trend model obviously is the basis. Good morning, user. Is the basis of what we do here at Game Edge to keep us on the right side of the market. This is based on the tick index. Bolded white line is your intraday instantaneous cumulative tick. Obviously, it continues to move to the upside and then flattened out into the afternoon yesterday, obviously indicating some stalling within the overall market and a little bit of weakness, which we'll check out on our trading view market trend model. We're above the colored ribbon now, so our mechanical portfolios are on. We're entering P-Trans to PX mechanical portfolio as well as our wheel strategy. Working extremely well on those positions. So that's our trigger to start putting more capital to work. And then our railroad tracks are your 1 to 3 day overall swing trading time frame. And those continue to the upside also with a possible little bit of stalling there. So if you entered some of the trades as we crossed above the colored ribbon, then you're in your 3 day time frame, basically from the 9th here. And you should be looking at least managing your positions or possibly taking a little profit if we move up to some stalling. Obviously, it looks like we're going to gap up this morning, though. So we'll see if this continues to the upside. But quick takeaway is the uptrend has resumed. How long it lasts is anybody's guess. But we'll just continue to follow our mechanical trading tags with our market trend model. And seems to be providing us excellent opportunities for trading also. Good morning, Will. And this is our trading view market trend model. Obviously, you can see into the afternoon. Yesterday, we started seeing some weakness overall, and then that was obviously indicated on this market trend model also. So this is not necessarily saying get short the market. It's just if you were able to capture a significant move to the upside using these overall signals, then possibly you just start managing your risk a little bit, take some profit off, and then leave some trailers or runners, and then wait to see how this completely pans out. So obviously, I'd anticipate this to move back to the upside at the open today and possibly resume the overall uptrend. But we'll be watching this intraday as that 7,000 level, again, is looming overhead pretty significantly. So let's go ahead and move on the SPX options complex, largest, most notional value that we look at. This is SPXA. We're basically 9 days away from the monthly OPEX expiry. So we're still call dominated. Transition area here. Looks like we're going to open at the top of the transition area above the transition area, you just see that 7,000 strike basically just glaring at you in the face. So this is really going to be that large hurdle to get above. Again, not sure that we can mount it, but if we do, we have the opportunity to move up towards 70, 20, 25. And then obviously 70, 50 up there is peak X on the SPXA. So that's where high sensitivity area and market participants are targeting. Again, that 7,000 level is going to be difficult to mount though. So we'll have to have market participants with out of the money call speculation above those areas and above those levels coming in to move us through that key area of 7,000. So I would anticipate some stalling, some choppiness, some difficult to get over 7,000 today. But if we do mount that 7,000, then we do have our opportunity to move up towards 20, 25, and 50 into the monthly OPEX. All right, let's move on to the SPXP. Upper quartiles turned on, call dominated, as you would expect now. Transition area is 69, 50, 55. So we'll be above that at the open. Again, that's really going to be an important supportive area. We've actually just chopped around that 50, 55, trying to figure out direction for a few weeks, even though we pulled all the way back down into the 69, 68 area, and then we ran back above it, and we were just chopping around the 50. So I think that's a key inflection point. Obviously, you'll notice on the 0 DTE, that's going to be a key transition area also. So again, as we say, just staying above transition puts you in a more favorable call-dominated environment. Then you see 7,000 up there is peak X, but you actually see the out-of-the-money call speculation really ramping up above 7,000. So as I said, if we get above 7,000, we have the opportunity to move up. You notice Charm actually is not very significant above that 7,000 level. So we do have the opportunity to move up. And then Gamma obviously is our speed that we can move through these key areas. So again, we could move up towards the 20, 25, and then ultimately up towards the 50 if we get above that 7,000 level. So we'll be watching that, see how market participants are positioning. We'll be watching our intraday call versus put speculation with our new tools, our call spec charts, as well as our volume chart. And then if we're below transition, again, 6,900 looming large, that would be most likely a stabilizing area and supportive. We have 20, 25 in there, 25 at a double strike there. But if we get below that, we anticipate some supportive type action into 6,900. All right, let's look at the overall GEX ratio. This is SPXP. As we continue to move up in the SPX, our resultant GEX ratio is getting down or in a negative slope. So again, that's a little cautionary for us that we're watching. Obviously, this is like a put call ratio, but it weighted for a short dated call versus put gamma. And if the SPX is moving up with price appreciation, you want to see the overall GEX ratio moving up, indicating out of the money call speculation is overriding the out of the money put speculation, or the short dated call gamma is increasing versus short dated put gamma. So having a negative slope with the SPX spot price up is a negative divergence. And again, that is a little bit cautionary for us, not necessarily saying that we can't continue to higher, but a sustained price at these levels may be a little bit difficult. So again, moving in that 7,000 level, if our SPX GEX ratio is moving down, then that's basically indicating that the call speculators are not supportive of those higher prices. So we'll watch this day over day and see if this changes at all. All right, let's move on to the SPXP Delta balance. So again, this was our cautionary coming into the day for me into Friday's expiry. And then after Friday's expiry, we're actually looking for some weakness into next week, as you see with the overall Delta balance. Again, this is taking the right-hand plane, which is above spot price, the left-hand plane, which is below spot price, red dotted line, green dotted line is the right-hand plane, and then aggregate Delta balance. And you can see we had a significant move to the downside heading into the day in the right-hand plane. So again, that's that out of the money call speculation was dropping fairly significantly. Left-hand plane, again, in the money calls below us, we're staying fairly well positioned, but it was dragging the Delta balance down. And then we saw we saw an overall improvement heading into the 12th, obviously, and then into Friday with the overall Delta balance. So we'll continue to watch this, see if this continues to improve with the overall gap up in spot price. I ran this at 69.41, but obviously we're 69.80 now. So we're capturing a significant more of those in the money puts are being driven out of the money that were above us. And those double strikes that we'll talk about on the 0 DT, and we're capturing some more out of the money calls. So again, this could improve the Delta balance heading into today. So we'll watch that. All right, SPXP 0 DT, we were put dominated to start the day. We were looking at the transition area here at 40 to 60 was going to be a key area to stay above. As we said, we talked about that 50 level. As you can see here, that's really a key inflection point to stay above or below, I think, for the continual day for today. So for below the 50, I'd anticipate some more weakness. If we're above 50 and the middle of the transition, then I'd anticipate the bulls to try to continue to have spot price price appreciate. Now you see these double strikes at 80, 85. We were testing those pre-market. Really, those are going to be those. I said the first hurdle was 75, but those double strikes at 80, 85. If we get above those, it's going to be a quick move up towards 7,000. You can see there's really not much exposure here, and there's really not much headwind. But then 7,000 comes in. That's a really strong headwind. You see the significant charm level there, as well as the puts sitting there also, and the out of the money calls. So again, those are going to be important as we move up to that level. If we get above 7,000, then there's really not a lot for us to stop us for a move up towards the 25, 30. Expected move is 70, 10 there. So those are the key areas we'll be watching. Below transition there, we'd look for a move back down towards 25 and then ultimately 6,900. You'll notice the drunken sailor range, really low exposure once we get below that transition area though. So if we get below transition and we have speculators moving to the downside, we could have a quick move down towards 6,900. Obviously with the gap up, not really anticipating that now. I'm anticipating us to pull back at the least or at the most to the transition area and be supportive type action. So again, a mess above us though. It's going to be really choppy to get through these unless market participants really come in and start hitting the out of the money calls hot and heavy at the open. Again, adding positive deltas to the book. Dealers are short those, and they have to buy to hedge and drive us up towards 7,000. So again, I think we've been pounding that, but key level there overhead to watch as we head into that. Net stack command. Today we are in the money puts. We were in the money puts overhead when I ran this at 49, 69.80. I can run this again and possibly post an update there. But again, getting above 69.80 is going to be key. You'll notice transition price there where in the money puts become out of the money calls. That was looking at the 57 level. So already above this. So this will be call dominated as we head into today. Charm level out of the money calls there. We already talked about 7,000. Gamma, the speed, if we get above 7,000, we're increasing those deltas at a rate at a good clip. And that'll drive us up towards the 70-10, 70-25. And then Vanna, we have the tailwind ready to go as long as we see volatility drop and out of the money calls come in. Again, that key level will be 7,000. And that Vanna tailwind can really push us up pretty rapidly if we get above that. So those are key areas for today. Let's go ahead and look at the trading view chart. Again, like I said, we're at that double strike there at 80, 85. So it's going to be a key area to get above or look for the overall stalling and pausing and pull back down to the first ledge there at 75. And then the next ledge would be down towards 50, 45 again. So I would be anticipating that's most likely what's going to happen. Even if we drive up towards that 7,000, we're going to hit some stalling. It's going to be pretty significant. We're going to see some pullbacks and then possible just choppiness within this overall area or even a pullback to 40, 45 would be within the realm of possibilities. And you notice SPY and Qs this morning here. P-Trans 695. Again, key area to get above and stay above. So notice that there area. And then P-Trans at 617, 0GAC 616. You already see us stalling into the Qs at P-Trans. And then overhead here, you see us stalling into those overhead areas there. Prior day high, pre-market high, even though we are above the transition area there. So it's going to be key area to get above. So, all right. Thanks, everybody, for joining us this morning. GameEdge.us newsletter here. Put in your email. You'll be delivered to Beyond the Bell for the weekend. And then free courses, Game Edge Fast Pass, again, flagship options course. Make sure you check that out as well as our other 2 courses. And then as always, you can click on the pricing tab and head to our Discord where 14-day free trial, all the tools turned on, and you can join our extensive trading community. So if anybody has any individual tickers they want to go over this morning, I'd be happy to cover those. Just go ahead and throw them in the chat and we can cover those. I was looking at NVIDIA this morning, had a nice move, obviously, the past few days. Yeah, NVIDIA, there we go, JS. NVIDIA looks great, call dominated above and below spot price. We are actually almost above the transition there on the quartile, so I think that's key. 200 has continued to be that speculative level overhead. I mean, we dropped a little bit, but I mean, really 200 has not changed on the upper quartile. So I think that's definitely a good target. I'm not sure when NVIDIA EPS is. I think it's coming up. But any pullback on NVIDIA looks good for supportive type action. Even when we were pulling back pretty significant on NVIDIA down towards the 170s, we were still call dominated below us. So it was going to continue to be supportive. So that's one that I will continue to go to and look to buy pullback opportunities. MU upper quartile looks good. We're almost at the top of transition there. 400 overhead, key area speculative there, or high sensitivity area there that I'd look for some overall stalling into 400, but everything looks good on MU also. Pullbacks look good on MU too. INTC continues to look great. 50 is that overhead PGX area. I got taken out of my shares on my wheel strategy. Great trade on that. Pulled back. I sold some puts below. Got some good premium on those. Actually sold the calls above. And then we had that just huge expansion day, and I got taken out. Shares called away, and had a great trade on INTC. But INTC still looks great. Call dominated. Top of transition. 50 to the upside. The only thing is, the overall structure is not advancing above 50, so you could just probably continue to chop around this area. Let me XYZ. Give me 1 second. Sorry, everybody. Call you back in a second. XYZ. I'm not really familiar with XYZ, but it's called as the upper quartiles. Call dominated. Bottom of transition area though, a little bit weaker. You see the overhead. Net delta is pretty red, as well as the charm. So significant move up on XYZ is probably going to be difficult. Not one that I would go to, as we have other stocks that are stronger. Hopefully that makes sense, user. Obviously, I'd prefer NVIDIA, MU, and INTC, right? So AMD, upper quartile, top of transition area. It's starting to improve. Call dominated, above spot price, or sorry, call dominated there. Pull back to 200, 220 to the upside. Looks good on AMD. So significant move back to the upside on AMD. Structure continues to improve on AMD, even though it was fairly weak there. App, call dominated. Let's see, call dominated, above and below spot price. You're within the overall transition, so a little choppy. PGX is all the way up at 500. So speculative to the upside. I'd look for some overall stalling into this 470. You see the charm level there. And then 480 to the upside. But pullbacks look good. Index is down towards 440. So any pullback towards 450 or 440 should be good. And then you see in the money calls below, so supportive. So everything looks good there on app. So makes sense. All right. Okay, thanks everybody for joining us this morning. Hope everybody enjoyed the presentation, the outline. SLV, yes. SLV continues to improve. And I am in SLV on the wheel strategy. And I continue to do very well on SLV, selling cover calls above as well as puts below. SLV continues to improve on the structure, even though we had that significant pullback. So what was interesting on SLV is I was watching the 65 to 70 area, and it still maintained those in the money calls below us, and nothing had ever changed, even though we went from 100 all the way back down to 70. And now the structure advanced to 80. Key area into let me look at this. I know I saw an PGX area that advanced on up towards 90 to 100, but not yet. So after the monthly OPEX is going to be interesting. I'm watching after the monthly OPEX, even though we're call dominated. Significant in money calls below us. Make sure those are still maintained. PGX was at 73.50 there. But if you go to upper quartile, 80 is that strike to the upside that speculators are at. Now, I'd like to see this change overhead, though. Yes, everything's posted, user. We have a scan. It's you can run it every day. My personal wheel positions are posted. Paul's personal wheel positions are posted, and we show you live trades on the wheel. So, yep, absolutely. And we give you a complete Excel list using proprietary scanners that show you stocks that are hitting all of our scans. That these are strong stocks. We're not trading junk stocks on the wheel that you're going to get stuck in. These are stocks that are not going to zero. They have option structure for price appreciation to the upside. And when they hit, we give you all the strikes. We give you the premium. We give you the probabilities and possible outcomes. And everything's in a quick Excel sheet you can scan, or that you can look at every day, and you can run it. So yeah, absolutely. So anyway, SLV, sorry, 80 looks good to the upside. That's where I anticipate some stalling. I'd like to see this overall structure change above, though. Significant in the money puts overhead. I'd like to see these start to go away with expiry and see how the money calls start coming in. I can put call and put OI on here if you want. I'm just looking at the net delta and net OI. Here, and it's starting to improve pretty significantly overhead. You see up towards 90 here. So what we can do here is I can add call OI and put OI really quickly here. And you can drag these over and you can look at these and you can actually see structure up here on the 90. You see the call OI there, obviously outpacing the put OI, obviously, but these are out of the money calls. That's why we're getting negative net delta here. And puts here are in the money, obviously. So, but you can see the overall structure here on the call OI versus put OI continues to improve to the upside here, right? So 95 all the way here, 100. And we can put bars on this also so you can look at this. But the structure continues to improve on SLV to the upside. I would just like to see some of these puts start to expire and move away, and this turn to a little bit more positive net delta to the upside. Start removing some of those in the money puts overhead. Give those put holders a little bit of fear overhead, which we could be actually because we're continuing to price appreciate. So get those put holders start feeling a little bit of fear and start getting some monetization there, and that would most likely help the overall structure. So. All right. Thanks everybody for joining us. Have a great day. Manage risk as always. Let's look at trading view before we get so 80 or that 80-85 double strike overhead. I'm anticipating that's going to be a stalling area within the overall SPX structure. If we get above that, we'll be looking for 7,000, and that's going to be a very large hurdle. So make sure you're watching that 7,000 this morning. So, all right. Thanks everybody for joining us. Make it a great day. We'll see you later.